Hello everyone. So today was a much needed breather that markets are taking. So finally we are having a rest day. So let us dive into the analysis of today and see what we can conclude from today's market action. Starting with the weekly time frame. So in the weekly time frame, I wanted to discuss two important things. One is we are still overextended on the top of the Bollinger Band. So let me show you in the charts what I mean. So here is the weekly chart, and as you can see, we are still hovering near the all-time highs, and again the Bollinger Band is still below the price action right now. So my initial support is going to be the top of the Bollinger Band, and my real good support is on the 5-day EMA. So the 5-day EMA is the blue line that you see over here. But before that, we will need to close below the top of the Bollinger Band in order for us to test the 5-day moving average. So right now, the price action is really bullish, and that too, it is coming from a very high volume as well. So we still have one important session of Friday left for this week. So after that closing, we will be able to conclude what is happening and on the weekly time frame. So right now, it looks like we are going to close the 7th consecutive green week, which is a very bullish sign. And remember, we are also very in the range of the all-time highs. So we'll see what happens. But right now, the market action alongside with very high volume is suggesting that we are going to sustain through these levels. There is a very high possibility that we will test the 5-day moving average in the coming weeks, but the probability of us consolidating sideways is more than for us to have a meaningful pullback. So let's see how it unfolds, but this is my take on the weekly time frame. So now let us focus our attention to the daily time frame. In the daily time frame, I wanted to discuss today a very important zone, that is the consolidation zone, that is very highly probable to happen in the daily charts. So let me show you what do I mean over here in the daily charts. So this is the daily chart, and if you can see over here, today's volume was extraordinarily high. So what do I mean by this? So today's volume was more than 715,000 contracts and ongoing. So it's a very high volume day. And on the same time, it is getting a breather. It is, getting a rest day. So as you can see over here, the formation is something like doji. Now, for all of those people who don't know what is a doji candle, it is a sign of indecision. That means the bulls or the bears, none of them are dominant. And as you can see over here, we took the support today at R1 in the intraday level and then again bounced back. But we are failing to close above the previous day's high. So today is a day where the markets are doing a lot of profit booking, and the rally is, buyers are getting exhausted. But before taking any conclusions about the pullback or about a meaningful correction, right now, the price action is suggesting that we will have a lot of consolidation zone. So let me show you exactly what zone I'm talking about. So this zone is going to be very important for bulls and bears. And let me tell you two reasons why. First, on the technical charts, R1 is the resistance level on the daily time frame. And second, this zone corresponds to the all-time high zone that was formed in the November of 2021. So there is a very high chance that we will go sideways or have a little bit correction, but right now the market action is still strong, and until and unless we close below the 5-day, it is very hard to be bearish. So for markets to have a meaningful pullback, the first thing that it needs to test is the 5-day EMA, that is this blue line, and that too with high volume. So tomorrow is going to be a very silent day, not a lot of news data releases, I mean not the critical ones. So let us see how it happens, but this is going to be the battlegrounds between the bulls and the bears. And remember that we are entering into the holiday season. So normally the price action or the statistical probability, if you look to back over 5 to 10 years, this time of the year, it is very highly possible that we consolidate or we go upwards, there is a very low possibility of us going downwards in a meaningful way. And if we go downwards, then my major support will be sitting at anchored VWAP, that is this white line that you see over here. So this white line also corresponds to the R1 level of the pivot points, and basically the prior resistance becomes the new support in the technical analysis. So if we pull back, then this will be a very good point for the battleground. But right now we are just consolidating, and I think we will continue to do so for at least 2 to 3 days, and then see how the markets are reacting. So that's my take on the daily time frame. In summary, my first level of support is going to be the 5-day EMA, and the next level of support is going to be this white line, that is the anchored VWAP, that is corresponding to 16,200. So we are sitting at all-time highs, and do not assume anything. Just look at the charts and see what data tells you. So that's my take on the daily time frame. So now coming on to the intraday, I was very sure that there is a very high possibility for us to have a rest day or a breather day. But at the same time, I was looking for the levels using which I can short. So let me show you what do I mean over here in the intraday charts. So as you can see over here, this is the intraday chart, and I use 5-minute time frame for the intraday charts. Now, as you can see, there was a very strong pre-market session. So what do I mean over here? At one point, we were 0.6 or 0.7% up in the pre-market session. So my whole thesis was, can we hold that high level and can we still go up? So the probability and the possibility of us going up was very low, because we were already overextended on the upside. So I was looking for those levels in which I can short the market. So over here, the moment we opened up in the regular session, this is what happened. We opened very strong, and then we got a bullish crossover. But as you know, I was looking for a short opportunity. So I was waiting for the levels to get rejected. So as you can see over here, after waiting till 7 o'clock, there was a news at 7 o'clock, which was a little bit, critical. So as you can see over here, 7 o'clock was the retail inventories, and that was the, last news. So my strategy going into today's session was, I will wait for 7 o'clock, see the actual direction of the markets, and then trade. So at 7 o'clock, we got a very big, red candle. And then, after waiting for 5 to 10 minutes, it again got rejected over here at the 50-day EMA. So on one hand, we are getting a bearish crossover. On the other hand, we are trying to close above it, but still getting rejected. So that was a very big, indication that the market is, the direction of the market is on the short side. So the only point was, where do we short? So the thing is, after getting the crossover and after getting rejected over here, we actually pulled down. So this was the time when I shorted. So over here, the thing is, after getting short over here, where do you keep the targets? So for that, you need to look at the daily charts. And my thesis was, if we are having a rest day, then the first level of support is the top of the Bollinger Band, which is sitting at 16,682. So my target was 16,680, just to be sure. So over here you can see, after getting rejected from the R1, we actually went till 680 over here. So once we achieved that level, I closed my positions, and then I was just waiting to see the real direction again. So as you know, over here in the mid of the session, we got a bullish crossover, but the thing is, it failed to close above the VWAP, and it failed to close above this red resistance line. So once we got the false confirmation, and once we got the confirmation on the downside, that was the time when we could have gone short again. So what was the target? So the target over here was this R1 level on the daily time frame, that was at 660. So it nicely corresponded to 660, and also it went down till the support level as the green line that you see over here. So S1 holded very well. So also if you look at the Qs did the same thing in the entire session. So as you can see, at the start of the session, it got rejected from the same resistance level, and then it got an extraordinary perfect support near the S1. So this was the intraday time frame analysis. Also, if you look at the VIX was taking a rejection from R1 over here as well. So if the VIX cannot charge higher, then the markets has to go lower. So that's the thesis behind tracking the VIX. And on the daily time frame over here, you can see that VIX is still failing to close below the Bollinger Bands. So that means the Bollinger Bands are acting as a really nice support for the VIX. So keep a very close eye on this VIX. If this support gets holded, then there is a very high chance that we get a nice little pullback. So that's my take on the intraday time frame. And now let's jump to the strategy for tomorrow. So tomorrow, as you can see over here in the economic calendar, we have all the news getting over on 6:45. So regular market session according to Pacific time starts at 6:30 in the morning. So at 6:45 you have a lot of news data releases, but after that you don't have a major news release. The Baker Hughes oil count is for the people who trade crude oil. So this news is related to crude oil. So according to markets, we should be having a stable day after 6:45 or 7. So my strategy going forward is I'm not going to trade for the first 30 to 45 minutes of the session, and then I will see the direction, and then I will place my trades. So that's the strategy for tomorrow. So at last, I would like to thank you for viewing, for your time. And also I would like to say this, that always keep learning, keep growing, and keep trading. So thank you, and please like, share, and subscribe so that YouTube algorithms, prompts this video to other people as well. So if you find value in this content, please make sure to subscribe. Thank you.